Breaking down Bitcoin's halving, what you need to know. The production of Bitcoin is impacted by the halving of Bitcoin, a predetermined event that happens about every 4 years. Miners solve complex math puzzles using farms of noisy, specialized computers. They are rewarded with a set quantity of Bitcoins upon solving a puzzle. What is the significance of the Bitcoin halving, and what should you know about it? To gain a deeper understanding of the Bitcoin halving, we will focus on it today. Number 10. What is Bitcoin halving? The halving of Bitcoin is a crucial occurrence in the Bitcoin blockchain protocol that takes place exactly every 210,000 blocks, or roughly every 4 years. The block reward that miners get for validating transactions and adding them to the blockchain is cut in half as a result of the halving event. The purpose of this reduction mechanism was to limit the quantity of new Bitcoins that Satoshi Nakamoto, the pseudonymous creator of the cryptocurrency, could create. The block reward of Bitcoin was fixed at 50 BTC at the time of its launch in 2009. Every 210,000 blocks, this reward is halved. Following the first halving in 2012, the reward was reduced to 25 BTC. It was further lowered to 12.5 BTC by the second halving in 2016 and to 6.25 BTC by the third halving in 2020. By 2024, when the next halving occurs, the block reward will only be 3.125 BTC. This process of halving will go on until the 21 million Bitcoin maximum supply is reached, which is predicted to happen in the year 2140. Number 9. Purpose of halving. The main goals of Bitcoin's halving mechanism are to maintain Bitcoin's scarcity and regulate inflation. Halvings lessen the amount of fresh supply entering the market by slowing down the rate at which new Bitcoins are created. Compared to conventional fiat currencies, which central banks are free to print indefinitely, this is essentially different. Bitcoin is a deflationary asset because of its controlled supply, which is intended to resemble the scarcity of precious metals like gold. The total supply of Bitcoins gradually approaches the 21 million limit as fewer are created. If demand stays the same or rises over time, the scarcity is meant to raise the value of Bitcoin. Furthermore, by ensuring that Bitcoin maintains its value and is worthwhile of the time, effort, and resources invested in it, the halving mechanism helps sustain miner interest and participation. Number 8. Historical halvings. To date, there have been 3 halving of Bitcoin, all of which have had a substantial effect on the market and network. The block reward was halved once on November 28, 2012 from 50 BTC to 25 BTC. This incident was a turning point in the history of Bitcoin, attracting more interest from investors and the media. Due to increased awareness and speculation, the price of Bitcoin skyrocketed from $12 to over $1,000 in the year that followed this halving. On July 9, 2016, there was another halving that took place, bringing the block reward down from 25 BTC to 12.5 BTC. The infrastructure supporting cryptocurrencies saw significant expansion during this time, with the emergence of significant exchanges, enhanced wallet services, and increased public interest. With speculative investment and growing adoption, the price of Bitcoin surged from about $650 at the time of the halving to almost $20,000 by the end of 2017. On May 11, 2020, there was a third halving that reduced the block reward from 12.5 BTC to 6.25 BTC. This incident happened at the same time that institutional investors started to show more interest in Bitcoin and started to regard it as a real asset class. After the 2020 halving, demand for Bitcoin grew and its potential as a store of value was recognized. As a result, the price of Bitcoin increased from about $8,500 to an all-time high of over $64,000 by April 2021. By 2024, the next halving is anticipated to bring the block reward down to 3.125 BTC. The fact that each halving in history has been preceded by a notable bull market shows how much a decrease in supply affects the price of Bitcoin. Number 7. Impact on miners. The core of the Bitcoin network, miners, is greatly impacted by the halving of the cryptocurrency. As a reward for validating transactions and adding them to the blockchain, miners create new Bitcoins. This block reward is halved with each halving event, which has a significant impact on miners' profitability. Miners receive less Bitcoin for doing the same amount of work when block rewards decline. This cutback may put pressure on miners to work more productively, utilizing the newest equipment and looking for less expensive electricity sources. It may become unprofitable for inefficient miners or those unable to obtain inexpensive energy to continue mining, which could result in industry closures or consolidation. Because miners are essential to maintaining the blockchain's security and handling transactions, mining is still a competitive and important part of the Bitcoin network despite these difficulties. Number 6. Market dynamics. Bitcoin halving have a significant and varied effect on market dynamics. Every halving event lowers the rate at which new Bitcoins are issued and put into use, thereby reducing the total amount. This lower supply of Bitcoin may result in higher prices if demand for it rises or stays the same. In the past, the months and years that follow a halving event have seen a sharp increase in the price of Bitcoin. The basic economic principle of supply and demand is what is causing this price increase. As fewer new Bitcoins enter the market, prices tend to rise, assuming steady or growing demand. Furthermore, the expectation of halving frequently leads to speculative purchasing, which drives up prices. For instance, following the 2012 halving, the price of Bitcoin shot up to over $1,000 in less than a year comparably. Following the 2016 halving, the price of Bitcoin surged from roughly $650 to almost $20,000 by the close of 2017. Bitcoin's price increased after the 2020 halving, from about $8,500 to over $64,000 by April 2021. Number 5. Supply and demand economics. The halving mechanism of Bitcoin is a crucial component of its supply and demand dynamics. Every time there is a halving event, the quantity of new Bitcoins is systematically reduced, creating scarcity. The fundamental idea of scarcity serves as the foundation for Bitcoin's appeal as a deflationary asset. The unlimited printing of traditional fiat currencies raises the possibility of inflation and devaluation. On the other hand, the supply of Bitcoin is limited to 21 million coins, and periodic halving guarantee a gradual decline in the rate of new coin creation. The price of Bitcoin may rise as a result of this restricted issuance and rising demand, especially from institutional and retail buyers looking to protect themselves against inflation. Existing Bitcoins appreciate in value as fewer new ones are produced, enhancing Bitcoin's standing as a digital store of value akin to gold. Number 4. Predictable schedule. Since the timing of Bitcoin's halving is hard-coded into its protocol, this aspect of its monetary policy is transparent and predictable. Because halving happened roughly every 4 years or every 210,000 blocks, market participants can make plans for these events well in advance. Bitcoin's halving schedule is unaffected by human intervention, in contrast to traditional financial systems where central banks can change monetary policies in response to economic conditions. This predictability, which establishes a defined framework for Bitcoin's supply, increases its allure. Based on this schedule, market participants such as miners and investors can make well-informed decisions. As a unique asset in the financial world, Bitcoin is made more trustworthy and confident by the immutable nature of its halving events. Number 3. Effects on transaction fees. With each halving of the block rewards, transaction fees become a more significant source of income for miners. In addition to the block reward, miners currently receive a small fee for each transaction included in a block. Transaction fees become more significant when the primary block reward is reduced through halving. Users may compete by paying higher fees to have their transactions processed quickly during times of high network demand. Higher average transaction fees may result from this competition, supporting miner profitability even as block rewards decline. The Bitcoin network's long-term viability depends on this move towards transaction fees as the main source of income, with the last halving occurring around 2140. It guarantees that miners will still be motivated to safeguard the network and handle transactions even as the block reward gets closer to zero. Number 2. Network security. After previous halving, Bitcoin's network security has not been jeopardized despite the decrease in block rewards. Technological developments in mining, such as larger economies of scale and more effective gear, have made it possible for miners to continue making a profit even on lower rewards. Furthermore, the price increase of Bitcoin after halving frequently makes up for the decreased block rewards, encouraging miners to keep the network secure. The decentralized mining ecosystem of Bitcoin, with participants dispersed throughout the world, further strengthens its defenses against intrusions. This strong security guarantees that transactions are handled correctly and the blockchain stays unchangeable, which is crucial for preserving confidence and dependability in the Bitcoin network. The incentive structure for preserving network security endures as transaction fees account for a growing portion of miners' earnings. Number 1. Investor sentiment. Bitcoin halving frequently result in a lot of market speculation and media attention, which can affect investor sentiment. Halvings are seen as bullish events by many investors because they have historically been linked to large price increases. In the run-up to a halving, this perception may result in more purchasing and market participation. The psychological effects of halving highlight Bitcoin's distinct monetary policy and support the story of its scarcity. Thus, halving have the potential to spur larger market cycles and increase interest in Bitcoin among both institutional and retail investors. Following halving events, this increased interest frequently translates into higher trading volumes and increased market activity, which further supports the rise in Bitcoin's price. By understanding the mechanics and historical impacts of halving, investors and participants can better navigate the complexities of the cryptocurrency market and anticipate future trends. If you liked our video, then hit the like button and subscribe for more updates.